Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec from Bloomberg Radio.
Well, yes, earnings this week are about several members of the Magnificent Seven group. We're talking about Apple, Microsoft, Alphabet, and Meta platforms all laying out their businesses and outlooks. In all, nearly 42% of the S&P 500's market cap reporting results. It will also be a reveal of how well Nvidia is doing and whether the AI trade and enthusiasm is for real or perhaps, Tim, getting ahead of itself.
Well, with more on how Nvidia has so much riding on this week's earnings, let's get to Bloomberg News Equities reporter Carmen Reinecke. She joins us here in our Bloomberg Businessweek studio. So, as I mentioned earlier, Nvidia doesn't report until next month, but how did the results that we get this week, Carmen, give us an idea of how the company is doing in its own sales?
Yeah, so basically the four companies that you just mentioned that are reporting this week accounted for 40% of Nvidia's sales in the second quarter. So what they are going to report in terms of capital expenditures is going to have huge read-through for what we're going to see for Nvidia in the coming quarters. These companies are also expected to combine or to report a combined $56 billion in capital expenditures.
It's crazy, right?
Yeah, this is a record. It's so much money, and really, this is all going to AI spend, or mostly going to AI spend, which is in turn mostly going to Nvidia chips because it's really just by and far still the winner in that space.
I do wonder with the buy and spend when it comes to Nvidia's chips, is there a cycle that we need to be smart about saying, okay, so maybe there's going to be a lot of spending in a couple of quarters and then maybe there's a bit of a pullback as they continue to build out and then they go back and buy more. Like we keep hearing about, shortage of supplies, like that feels like that's been such a big part of the narrative around Nvidia's chips. But help me understand so that when we get these results, can be smart about whether or not it really is bad for Nvidia.
Yeah, I think that's a great question. One thing that people are looking at is if there is going to be a slowdown as people sort of turn over, have to move to the next chip. That's why we're so focused on anything that we can hear from Nvidia or from clients about Blackwell. So far, the company has said that everything is fine. It's on track to ramp in the second half of next year. But you're right. If these companies aren't needing to spend as much, if they're able to sort of keep the chips that they have, that could mean the sort of incredible revenue growth that we've seen from Nvidia could come in. Ultimately, it's going to come in just because the comps quarter over quarter are going to get more difficult.
Right.
But obviously investors will just want to know that there's still growth going forward.
Maybe one of the reasons, Carol, we saw Jensen Huang last week out in India making those big moves when it comes to tying up with Reliance Industries, Tata, and the like.
Yeah, kind of really laying out the footprint, right, to make sure that kind of the dominance, I guess, continues, right, going forward.
Yeah, exactly. And making sure that they're not, so reliant just on like Taiwan Semi or, just that part of the world.
Okay, so, go ahead, Carol.
Well, among those Mag 7, is there one in particular that you think investors should be focusing on, or is it equally kind of laid out?
The thing is that the stories are so different across all four of them that I do think that it's important for investors to be looking at each and every one. I mean, just even the stock moves are so different. I'm looking at, Microsoft and Meta for later in this week, and, Microsoft shares have trailed the S&P, but Meta is one of the best performers. So those companies are reporting on the same day. You have to look at both. These are all such important companies, as you were saying. I mean, a huge part of the S&P.
Does it get to the point at some point soon, Carmen, where we don't necessarily need to see these companies continue to spend because they have whatever chips they need? I know that's not great for Nvidia, but is there a law of diminishing returns with this type of technology, or is the idea that Nvidia is going to come out with something after the Blackwell that these companies will then need to spend tens of billions of dollars on also?
I mean, I think that's like the million or billion or $1 trillion question, and is if Nvidia can continue to innovate and spin it forward. And I think that's really what they're trying to do. That's what we're seeing with Blackwell. I'm sure that there are plans even beyond that to just continue to build compute, to continue to build speed, and all of these things. But yeah, that's why people are watching the capex on these companies so closely,
right,
because it matters.
And Nvidia's had the first mover advantage. That stock, by the way, up 185% so far here in 2024. Yep, just a shabby, almost 200%. All right, Carmen, thank you so much. Bloomberg News equities reporter Carmen Reinecke joining us here in our Bloomberg studio. That's one focus for investors this week. Tim, we got to get to the other one.
Yeah, that's certainly U.S. elections. 8 days until Election Day. Both candidates hitting the campaign trail over the weekend, tapping big venues and big celebrities and making their final pitches to voters.
For the past 9 years, we have been fighting against the most sinister and corrupt forces on earth. With your vote in this election, you can show them once and for all that this nation does not belong to them.
And I'm going to tell you, as I travel around our country, there is an overwhelming call for a fresh start. For a new generation of leadership that is optimistic and excited about what we can do together.
All right, of course, Donald Trump and Kamala Harris on the campaign trail, both laying out their vision going forward. Safe to say it's a campaign season that has seen both focusing on those key swing states and also venturing to states that are not, and that they pretty much have no chance of winning. For Donald Trump, that included a big rally in New York City yesterday.
All right, for more, it takes us to a most read story on the Bloomberg today and why Trump's campaign came to New York. Back with us is Bloomberg Opinion Senior Executive Editor Tim O'Brien. He's here in our Bloomberg Businessweek studio. Tim, also the author of Trump Nation, The Art of Being the Donald. Tim, you have a great column out today about why Trump came back to New York City. I mean, this is a place that he left a few years ago, but it was a place that also built his fortune. Why did Trump come back here?
I don't think it was strategy, Tim. It makes no sense to come to New York if you're at the tail end of a race in which 7 swing states, New York not being one of them, is going to determine the outcome. I think he came for personal reasons. You know, he is a New Yorker to his core, and I think he's decamped to Palm Beach, but he'll always be a New Yorker. He wants the city to love him. You know, he got tried in 3 different trials that ended up with very embarrassing judgments for him that sort of seemed like the end of his run here. But he clearly wasn't done with it. And I think he came back to Madison Square Garden in part to show that he was still around to New Yorkers. But probably more importantly, New York's the media capital of the world. And I think he wanted a lot of eyeballs and he wanted a lot of attention for what he had to say on Sunday. I think what came out of that convention or out of that rally is something we should really reflect upon. But he did come, I think, for the media scrutiny.
I want to get into what we should be reflecting upon, but I want to go back to, you have come into this studio and talked to us about Donald Trump being a master of media, and he understands, right, the optics of being at Madison Square Garden, and a huge crowd around him and kind of laying it out there.
And, you know, sort of repeating the roll call of speakers who were at the RNC in July. I was there. It was very similar to the RNC. Hulk Hogan showed up again. He ripped his shirt off. Trump gave a closing speech that was somnambulant and rambling, and I don't know if it did anything for him again, tactically or strategically, but it allowed him to sort of indulge his own need to be in the spotlight.
In terms of some of the folks that spoke at yesterday's rally, it does seem like obviously, there were some things that have gotten a lot of media attention, and most or many Americans would be or are appalled by what was said in a nation that is, you know, the result of immigrants. Having said that, what's your understanding of campaigns and how much the Trump team knew who was going to be there, what they were going to say in terms of what they said at the rally?
Well, I mean,
because they seem to be backing off, saying, "Oh, you know, a little bit."
Yeah,
like
and so the rally was a fountain of misogyny, racism, xenophobia, a lot of talk about the other. I don't think it's partisan or ideological to make that observation. It's just about tolerance and core values. And there were heinous, ugly things said on that stage. Whether or not Trump's political team vetted the speakers who came out, I mean, there were, you know, sort of C-list comedians and
I didn't know a lot of the names.
And who just, you know, became sort of like fraternity bros, screeching racist rants. If they didn't vet them, they should have. If they did, then they shouldn't have let them on the stage. They were on the stage because they're articulating part of what Donald Trump's message is, which is that he's threatened by the other. His campaign is threatened by the other. They define the other broadly, whether it's China or people of color or immigrants or Democrats or women, on down the list. And there was a lot of that last night.
Tony Hinchcliffe, the comedian that we're all talking about, his joke that is getting a lot of attention today is about comparing Puerto Rico to a pile of trash in the ocean. The Trump campaign did something rare, and they actually came out and said that wasn't part of their view. It's not often that they'll rebuke people who speak at their rallies. Tim, what was notable to me, though, and it wasn't even a rebuke, but what was notable to me is that was sort of the only part that they distanced themselves from.
Right. I mean, there was equally horrific stuff said about Kamala Harris and her race and her gender and her nationality. Also, Hinchcliffe may have been a comedian, but what he said wasn't a joke. It was a racist smear. And I would argue that probably they thought it might be safe to put that in the mouth of a comedian. So there was deniability. Oh, can't you just take a joke if we gotten too politically correct, that you just can't see something funny about slagging an entire territory?
So fair to say that the Trump campaign accomplished what it set out to do yesterday, or is the fact that we are focused on this and not his sit down with Joe Rogan that aired on Saturday the focus of what we're talking about?
Well, at one point during Trump's comments at the Garden, he said, the Republican Party is the party of inclusion, and I really like that. While everything being said around him was as divisive as imaginable. So if their goal was actually to embrace this idea that the Republican Party could be a unifying force at a moment when we have great political polarization, they failed utterly. The other way to interpret that is they actually aren't serious about any of that, and they're willing to indulge racism or extremism in the service of Trumpism and Trump's own candidacy.
There's what Donald Trump said and the others said on stage, but there's also all of the Americans and voting public that were around them that didn't necessarily boo, didn't necessarily walk out. And I guess, like him or not, Donald Trump, I constantly think about half of America who are okay with this.
That is a great observation, because it's a little simplistic to simply point the finger at Donald Trump. He is an outcome as much as he's a cause of these things. And he represents something that's been in the United States for a very long time. We fought a civil war here.
Right.
Slavery existed here, on and on and on. And I think people have to decide what they want to say their authentic values are, whether they're a Democrat or a Republican. When it comes to, I think, racism and sexism and this kind of vitriol, no one should embrace it.
You know that vitriol from Donald Trump directly, right? You are the subject of a lawsuit from him, wrote a book on him. If there is a second term in the White House, what's your biggest fear?
Well, I mean, I think Trump has told us what that's going to be. I think.
Do you agree with those, though, Tim, that say, "Oh, it's just show," and he's not going to actually do all that stuff? Forgive me for interrupting.
No, that's fine. I think he deeply wants to do these things. I think he has authoritarian impulses. I think he wants to weaponize the Justice Department against his enemies. He said he's going to do that. I think he wants to silence dissent within the country. He said he wants to do that. I think he wants ideological sniff tests at public schools. He's a book banner. He is going to institutionalize things in this country that most Americans aren't used to being around. And I think we have to really think about what that means.
Why do you think we've seen such a silence, at least this time around, from corporate America, from large media organizations, a couple in the news right now over the last week, the Washington Post and the Los Angeles Times, for coming out and saying we're not going to endorse anyone this time around? Why do you think we're seeing that silence right now?
Well, because, people become cowed by power. And I think the anticipation in recent weeks is that Trump's polling numbers have improved against Harris. If he becomes president again, certainly businesses have reason to wonder whether or not he'll weaponize the powers at his disposal of the federal government against them. The media is concerned about it. Everyone's concerned about it because the presidency is a powerful office. And I think people are hedging their bets. The issue is, do you hedge your bets at the expense of ethics and decency and democracy and other values, or do you hedge them for just raw self-interest and a lack of courage?
If Donald Trump, I always think about this, like if he hadn't come to power, if he hadn't become president, would we still have this division and this hate?
Well, so I think the division has always existed. I think Trump just made it more comfortable for people to express it more openly. Social media gave it a place to sort of proliferate in a way that prior media environments didn't. And for people to sort of live in echo chambers where they're not talking to their neighbors and getting different points of view. And I think we have to come to terms with it as a country. And if there's a virtue to the arrival of Donald Trump, is he stripped this Band-Aid off these myths we tell ourselves about the country's about, and we should take that on in a transparent and full-blooded way.
Without asking you to give a prediction, what do the next 8 days look like, or what does Wednesday?
It sounds like
next
you're
week
asking
look
me
like?
to give you a prediction, my friend.
Or it might be 9 or 10 or 11
Yeah,
days.
I mean, I sound like a broken record. It appears, based on the polling, to be a very close race. However, I think the polls in the last few cycles have been wildly off in terms of outcome, within their margins of error statistically, but not close in terms of ultimate outcomes. And I think this race could end up surprising people in terms of what we see next week.
Does the early voting, like so much early voting, say something to you?
Well, I think, the positive thing about early voting is the voters are engaging, and
Yeah.
you want that, and it appears that voters from both parties are engaging, and that's a good thing. People shouldn't sit on their couches when they have the ability to vote.
Agreed. Thanks for engaging with us.
Thank
Always.
you. Thank you.
Bloomberg Opinion Senior Executive Editor Tim O'Brien, of course, joining us in studio. You could read Tim's story and more from Bloomberg Opinion. You can find it on the Bloomberg or at bloomberg.com/opinion.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Public health saved your life today, but you didn't even know it.
Viruses, pathogens, threaten to bring us to our knees.
We need to tell the story of public health.
I'm really worried that any pandemic can just... because we are not yet prepared.
Inequality is a root cause of illness.
The trust level is broken.
It's the politicization that's killing us.
Public health is like the foundation of your house. And let me tell you, ours is cracked.
All right, that, of course, is public health. And the story of public health is the subject of a new documentary. It is called The Invisible Shield. It's a 4-part series that reveals a little-known truth. The series, by the way, made possible by Bloomberg Philanthropies and Radical Media, and airs on Bloomberg TV tonight through Thursday at 6 p.m. Wall Street time.
We've got with us Dr. Josh Sharfstein, Vice Dean for Public Health Practice and Community Engagement at the Johns Hopkins Bloomberg School of Public Health. He's in the series. He's also the author, or the co-author of The Opioid Epidemic, What Everyone Needs to Know. Dr. Sharfstein joins us from the American Public Health Conference in Minneapolis, where he and others are holding a screening event a little later today with 3,000 public health professionals. Dr. Sharfstein, nice to have you back with us. You joined us regularly during the height of the pandemic, and we certainly appreciated that. We appreciate this. I want you to talk a little bit about the Invisible Shield, because I think that was a really striking clip, because yes, each and every day we're essentially protected from disease and from an early death by public health innovations that have been made over the past few thousand years. How should we be thinking about this in our day-to-day life?
There's a saying that public health saved your life today, but you didn't even know it. We go about our daily lives. We're able to do all the things we want to do, in part because we're not suffering horrible injuries or tainted food poisoning, or we're choking on dirty air or contaminated water. But we sort of take those things in stride now because the public health system has been so successful. But we really can't take it for granted. And the message of this series is how much work has gone into building up this shield and how fragile it can be. And we need to now really pay attention to it.
I do think about when you talk about public health, I think there are so many things that people just take for granted about what public health has done, Dr. Sharfstein. So what are those initiatives? What is it when we talk so much about public health? What are those things that we take for granted and,
Sure.
That are so important?
It used to be that most families, if they didn't have a child die in the first couple years of life, they certainly had a relative who had a child die. It was a very, very common occurrence that children die. The president of the United States had children die. And it was because of all kinds of preventable diseases. And those are gone. And, infant mortality is much, much more rare. It's just one window into the kinds of things that public health has done for us. And what we saw in the pandemic is that people can get very upset at public health, and they can wonder why we even have a public health system. But that is a very dangerous way of thinking because of all the things that public health does. I'm sitting in this hotel room here in Minneapolis for this big conference, and I can just go to the tap and get water. I can walk outside without, trouble breathing the air, which isn't true in other countries necessarily. And there's so many things that we need public health to keep delivering. And with the nature of the challenges that we have today, the way that viruses can traverse the world so quickly, all the other problems out there, we need public health to keep us safe. And that's a critically important message, and really appreciating the history makes that message even stronger.
But it also comes at a time, Dr. Sharfstein, where trust in these so-called institutions isn't necessarily high, or it's deteriorating quite a bit over the last few years. We certainly saw that during the pandemic. And we see that with the way that's playing out in the election right now with who different candidates want to appoint to certain positions, and the way that some of them are skeptics of institutions and also of vaccines, for example. How do you do that at a time where there is this skepticism, there is this mistrust of institutions?
Well, that is what we'll be talking about today at the conference. It's something on a lot of people's minds in public health. One of the answers is to essentially go analog, to not just rely on messages you're posting on the web or press releases you're putting out, but to be meeting people in communities with people that they already trust. So it's their doctor, it's their faith leader, a local business, really making sure that people are hearing messages not just online, because online you're competing against just a flood of falsehoods on many of these issues like vaccines, but actually in the real world, people they trust, and the public health community has to really adapt to that reality, both in terms of the humility that we have and the transparency that we offer, but also in the kinds of partnerships that we can develop so that people really understand they're getting good information from people who care about them. In public health, we care that you get to live the life you want to live, that you're healthy to see your children grow up, and that your children can grow up. And having that message delivered not just by the person who's for the government, that is, people are being told not to believe, but that message is also being delivered by people in your community. That's, I think, one of the solutions.
One thing I wanted to ask you, Dr. Sharfstein, is, what is your biggest concern when it comes to the U.S. election outcome and what it may mean for public health spending and work or attention and the impact that it could ultimately have on the U.S. public? Safe to say there are many that already feel like the U.S. system or the U.S. government leaves them behind. So I'm just curious what could happen on this front.
Well, I can tell you as someone on the advisory committee to the director of the Centers for Disease Control and Prevention, that this challenge that we're talking about is very well understood right now, and that there are a lot of changes being put into place to try to address it, to try to build trust through partnerships, good information, and transparency. I'll be frank, I'm a little concerned about Robert F. Kennedy Jr. walking around and saying, he's going to be in charge of all the public health agencies. This is someone who is just a font of conspiracy theories and lies about public health, and who I think could do grave damage to not just how people perceive public health, but the actual work of public health. And the consequences of that are the consequences that, frankly, Robert F. Kennedy Jr. has been involved in causing, which are massive outbreaks of preventable disease. And so I'm worried. I'm worried with the outcome of the election and what could happen afterwards.
I'm glad you brought up Robert F. Kennedy Jr., Dr. Sharfstein. What, in your view, could he do if he were put in a position of power over Health and Human Services, for example? What could he do? What could he undo? And what could be the consequences of that?
Well, I think that it's good that we have different kinds of checks and balances. There's some really great people, many really great people who work in federal agencies who are obligated under the law to do the right thing, for the public. But we certainly have heard claims that a new administration should revoke the approval of vaccines, revoke the approval of abortion medications, revoke the approval really without any meaningfully, persuasive scientific justification. And so, we all take it for granted that we can send our kids to school and they're not going to get measles there. But if you
Right.
revoke the approval of a vaccine, then, that's going to happen. And when there are enough kids getting measles, kids start to die from measles. And it's like, that's why we have a measles vaccine. So there's a lot of potential risks. I can't handicap how likely they'd be, but I can tell you that it is very concerning to have someone who has been so hostile and so conversant with falsehoods, saying that, he's going to be bossing people around at agencies that we all rely on to protect our health.
All right, going to leave it on that note. Dr. Sharfstein, as always, thank you so much. Vice Dean for Public Health Practice and Community Engagement at the Johns Hopkins Bloomberg School of Public Health, also talking to us about the new documentary series, The Invisible Shield, made possible by Bloomberg Philanthropies and Radical Media. The Bloomberg School of Public Health, by the way, supported by Michael R. Bloomberg, the founder of Bloomberg LP and Bloomberg Philanthropies. The series airing on Bloomberg TV tonight through Thursday at 6 p.m. Wall Street time. All right, folks, now let's get to a region of the world that we are seeing increasingly catch the attention of investors.
And that is India. JP Morgan CEO Jamie Dimon says there's a substantial opportunity for India as companies look to diversify their supply chains away from China. That's according to an interview with CNBC TV 18. He did caution, though, that the transition will take years as firms navigate the complexities of relocating operations. Increasingly, Carol, we see a growing number of stories about companies expanding their presence in India and investors certainly making bets there.
Yeah, I printed out a bunch of them. With a view on the Indian economy, we are delighted to have with us the chairman of the State Bank of India, C.S. Sethi, which is the largest public sector bank and the biggest lender in India. He joins us here in studio. Chair Sethi, so nice to have you here on Bloomberg Television and radio. You were in D.C., let's start there, for the IMF meetings. What at the meetings gave you optimism for India and the world more broadly, and what did not?
Yeah, thanks for having me on the show. I think the positive news which emerged in the IMF meetings is that the global inflation is coming down. It's a good news. While the growth rate seems to be moderate, still in the range of 3 to 3.5%. The bright spark obviously is India, which is expected to grow at around 7% to 7.2%. Even the IMF places the growth rate at 7%. The Central Bank of India believes that the growth rate could be 7.2%. I think it's a really interesting story which is unfolding in India, both in terms of growth trajectory which the country is taking on, and the equity market is doing well, and the inflation is also moderating there, while the food inflation is still a matter of concern there in India.
So let's talk about some different sectors of the economy. You heard me mention the comments by Jamie Dimon over at JP Morgan Chase about supply chains transitioning to India. On the ground, what can you tell us about that actually happening in India right now?
Yeah, I think there's most visible success stories, of course, Apple. 25% of Apple 16 is produced in India. Couple of things which are very seriously being pursued by the government of India is a performance-linked incentive for various industries, more than 16 to 20 industries, particularly in the areas of electronics and semiconductors. These are the sectors which are getting the performance-linked incentive from the government of India, and there's a good amount of foreign capital which is coming in into these sectors.
And what in particular? Tell us a little bit about that. I think I'm not kidding when we say the ton of stories. I have a pile.
A stack of stories that we have.
India eclipsing China and MSCI global stock ages to drive flows. That was back in mid-September. Blackstone sees Asia as growth engine, has scale in India.
Jensen Huang was there last week.
Brookfield to add to its $13 billion bet on India's projects. So there's so much going on. You point that out. Where in particular, give us some insight for our Bloomberg audience, who's a global audience, about where the money has picked up dramatically.
So the money is mainly coming in the couple of sectors, particularly in the renewables. I think there's a huge amount of focus with the commitment what India has given under the COP26 that by 2030 the addition in the renewable energy would be almost 500 gigawatts. That is attracting a lot of attention. And the logistics is another area, the warehousing, roads, ports. These are all the areas which are attracting the global investment, in a big manner.
I was in India now like 12 years ago. And one of the things that I found so dramatic, and it was a trip that I took at like 2 a.m. with my team. We were going to Agra to see the Taj Mahal. But what was fascinating is that's when you saw everything moving around, because that's when the roads were less busy and just so much infrastructure moving around. What can you tell us too about the infrastructure build out that many have deemed so necessary to take India to the next level?
Absolutely. I think one of the most important requirements for Indian economy to continue to grow is strengthening the infrastructure. And there are two things which are happening. I think there's a significant government expenditure, capital expenditure, which is focused on the infrastructure building up. And there's a private investment also is coming in a big manner in terms of infrastructure. We see a lot of airports being built, seaports being strengthened. And road network, of course, is one of the best now in India. And we have dedicated freight corridors which are coming in, to enhance the speed of moving the goods from one place to another. So I think,
I was just going to say, we only have a few minutes left, but I want to move from the macro to the micro and talk a little about your plans over at SBI and where you're thinking about expansion in terms of parts that you're focused on growing. What are the goals for growth over the next 6 months, 2 years?
So, as you know, I think in terms of the reach, we have one of the best reaches. We have the largest network of branches, largest network of ATMs. We have served almost 500 million customers, and every Indian family in some way, is engaged with SBI. We have significantly invested in the technology and digitalization in the last 2-3 years, and we would like to leverage that technology and digitalization to reach the underserved, unserved across the country. Still, I think there are a lot of banking needs which are unmet in India, which we want to reach them, and this investment in technology and digitalization has helped us to reach the bottom of the pyramid in a much lower cost. Which means that the investment in technology helped us to increase our operational efficiency. My focus in the next 6 months would be that how do I leverage the investments what we made in technology to increase the operational efficiency and productivity of our employees.
I am curious too that we've noticed too that deposits have been challenging for a lot of, or really all Indian lenders for the past few quarters. So your strategies that have worked, and what else do you plan to do? What's really worked in terms of building out deposits?
One thing, of course, is, in India, despite so much digitalization, the physical presence is very much important in terms of deposit mobilization. And we have the largest physical presence there. Number two, we have...
Does that mean you continue to build out the physical presence?
We do. We want to enter into areas where we don't have a branch. We would like to set up that physical branch. And we have a very strong mobile application, which is, currently you will be surprised that every day we open 50 to 60,000 savings bank account a day.
Wow.
So we have 27% market share in savings bank, which is the low cost deposits. So our focus would be, how do we strengthen this franchise and start mobilizing more and more low-cost deposits.
And increasingly, just got about 15 seconds, are they wealthier deposits too that you're noticing? A lot of wealth creation we're seeing in India.
Yes, and we have largest number of clients who qualify to be wealth management customers, and we are investing in a wealth management technology to reach out to them.
AI too, just quickly.
AI, of course, a large-scale adoption of AI. You can't speak about banking without talking about AI.
You can't speak about anything, it seems, without talking about AI. Chair Sethi, thank you so much. We really appreciate it. C.S. Sethi, Chairman of the State Bank of India.
You're listening to the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Republican vice presidential candidate and Ohio Senator J.D. Vance said Donald Trump would keep the U.S. in NATO if reelected, though it's important to note that the transatlantic alliance isn't, quote, just a welfare client. Vance spoke on NBC's Meet the Press on Sunday.
I think it's important, Kristen, that we recognize that NATO is not just a welfare client. Donald Trump wants NATO to be strong. He wants us to remain in NATO, but he also wants NATO countries to actually carry their share of the defense burden.
That was Republican vice presidential candidate and Ohio Senator J.D. Vance on Meet the Press on Sunday. No question, Dr. Angela Sten is watching this closely. She's senior fellow at the Brookings Institution and a member of the Council on Foreign Relations. She's a former national intelligence officer for Russia and Eurasia at the National Intelligence Council. Earlier, she was in policy planning at the U.S. Department of State. She's also professor emerita of government and foreign service at Georgetown University. She's also the author of Putin's World, Russia Against the West and With the Rest. She joins us from London.
Dr. Sten, Angela, so great to have you back with us. What do you think, depending on the outcome of the U.S. election, if it is Donald Trump for a second term, what will be likely the relationship between U.S. and NATO?
Well, President Trump and, of course, vice presidential candidate J.D. Vance have both been very critical of NATO, but particularly former President Trump, saying that these countries don't carry their full share of the defense burden, as if this is totally a one-way relationship and that NATO is some kind of protection racket. Our allies do things for us, too. But I do think what will happen is countries will be under pressure to spend more on defense, and not all NATO members even spend the required 2% on defense. Some, like Poland, spend much more. And I think what President Trump has also said is that maybe the U.S. wouldn't agree to defend countries who don't spend enough on defense. So there'll be a lot of uncertainty. The last time around, apparently former President Trump wanted to pull the U.S. out of NATO. There's now legislation saying that he can't do that. It'll be a much rockier relationship with NATO, but NATO understands that. And the other NATO countries have been taking measures to try and insulate themselves against some big break.
Right. And also NATO certainly watching closely as this war continues to wage on. What are we getting to our third winter here between Russia and Ukraine? Having said that, layer on the recent news that Russia made a decision to bring North Korean troops to shore up its war-weary forces. What does that say to you? We constantly talk about interesting geopolitical alliances in today's environment, but that move in particular says what? You're the expert here.
Well, first of all, it says that the Russians, they're having a mobilization problem. So are the Ukrainians. But the Russians feel that they need more troops. The Ukrainians did invade the Kursk region of Russia. They've taken some of the territory. Russia has been pushing them back. But apparently what these 10,000 troops, if we're to believe the Pentagon, will do, North Korean troops, is actually go to the Kursk region and fight to try and take back all of this territory from Ukraine. And in fact, the Ukrainian army has now published, given its soldiers a phrase book of Ukrainian, North Korean phrases in the hope that maybe some of these North Korean troops will not continue fighting. So I think it's quite serious. It really, this is the first time you have these foreign troops fighting on Russian soil. And I think that it could lead to greater instability. I mean, depending on what happens, it could also be quite detrimental to the Ukrainians if these North Korean soldiers are able to push them back further from the Kursk region, because this was an element that the Ukrainians hope would be a bargaining leverage for them if and when there are negotiations with Russia.
I want to point out South Korea is considering whether to send weapons directly to Ukraine, reversing a policy banning lethal aid to the country at war. This is according to a senior South Korean official. Seoul has previously backfilled the U.S. for shipments that it has made, and are reporting noting that if some of Seoul's vast stores of artillery shells started heading directly to Kyiv alongside Pyongyang's supplies to Russia, that would result in the war drawing upon two of the world's largest artillery forces. To me, that would say a broadening out. Is that a fair assessment, Angela? And makes me wonder what
Yes,
next.
I think so. And I think, and I think that we also understand that the South Koreans are now going to give much more intelligence help to the Ukrainians in their fight with Russia. But it does. I think it could broaden it out. And I think, I'm not sure that the Chinese are very happy about this. But, Putin has justified this by saying we have a strategic relationship with North Korea, and we've been attacked on our territory. Therefore, they can help us. And this really raises the prestige of North Korea, a country where many of these soldiers are very short because they're malnourished, a country that can't feed its own people, and yet, has nuclear weapons and is now fighting in Russia.
We're in a very interesting moment where we have the world's wealthiest person, according to the Bloomberg Billionaires Index, has been in contact with Vladimir Putin. I'm talking about that bombshell report last week from the Wall Street Journal that reported that Elon Musk had been in regular contact with the Russian president since late 2022. The discussions, according to the journal, were confirmed by several current and former U.S., European, and Russian officials. A reminder that he has security clearance due to a lot of the government work that SpaceX does. Dr. Stent, to what extent should we be concerned about Elon's conversations with Putin?
Well, I think we should be very concerned. I wonder what the motivation behind this is. Putin has said, well, we just talked once and it was about space. But even if they're talking about space exploration, as you yourself said, Mr. Musk has high security clearances. He knows a lot. What's he telling the Russians? Apparently, he wants to make sure that, Starlink will be able to use whatever terrestrial stations it needs to continue operating, and that Russia, could be an important part of it. It is the largest country in the world, but it raises very serious questions. And then, of course, you have Elon Musk's support of former President Trump. He's paying people to register to vote. And of course, you have the reports of former President Trump's conversations with Putin that have happened since he was president. And you just wonder where all this is leading. Musk is a very wealthy man. Putin is reportedly also a very wealthy man. So I don't know if this is part of the club of billionaires, but there should be security concerns here.
It's interesting. We use interesting a lot this year, or the last couple of years, or the last decade. But what I'm thinking about is we kid, but not kid, about these bromances, whether it's Donald Trump and Elon Musk, or whether it's Donald Trump and Vladimir Putin. You've studied Putin. I think we've talked about this before. Is there a real relationship there? Or I think we've talked about Putin in the past and kind of playing with Trump, or playing Trump specifically. But help me understand this relationship between the two, or what it is.
So I would think from former President Trump's point of view, he admires strong men, and we certainly know that he admires Vladimir Putin. Vladimir Putin is a former KGB agent who used to be a case officer, and he understands how to manipulate people. And from some of the reports we've seen, he knows how to flatter people. He said very flattering things about former President Trump. Former President Trump really likes that. Does Putin view Trump as someone who's a friend? I doubt it. I think this is all instrumental for him, but it's very useful for him. He would like to have a Trump victory in November because he then will see a more chaotic America. So I think there's a great difference between the way that these two men view each other and what they view as the point of their relationship.
Why, in your view, are we not hearing more from members of Congress who might understand that it's an issue, the relationship here, but aren't coming out and saying that, hey, this is the type of thing that, at least in your view, Dr. Stent, is dangerous?
Well, I think we're probably hearing from Democratic members of Congress. They're speaking up. But, as you know, people who elected officials in the Republican Party aren't really saying anything because no one wants to criticize what's happening there. So I think that's probably, but it's not as if no one's talking about this.
All right. So how are you thinking about, how many times have we had this conversation, when we might see an end to this war? But here we are, getting ready, as I said, the third winter, and it's just pretty remarkable. Ukrainian President Zelensky saying today he had arrived in Iceland to talk about the Russian invasion with leaders of several Nordic countries, wanting to talk and rally allies around his victory plan. Is a victory anytime soon in your view? And what gets us there and what won't get us there?
Yeah, so I was at a meeting last month in Ukraine, and clearly the Ukrainian leadership is very concerned about the outcome of our own election. Because from what former President Trump has said, he said he'll end the war in 24 hours. We obviously have no idea how he would plan to do that. But I think what we do know, and again, listening to J.D. Vance, is that support for Ukraine would probably end with a Trump victory. Financial support, probably weapons support, and the Ukrainians would be under great pressure to negotiate a settlement with Russia, which really would not be in their interests. That is to say, if former President Trump offers President Putin, who we have to acknowledge has no interest in negotiations at the moment, but if he's offered something that would make it worth his while, and former President Trump has said that would include lifting sanctions against Russia, which of course Trump can't do on his own. There is a U.S. Congress. So I think that's one scenario. And I do think with the Trump victory, the war probably will end sooner, and it will, end with a settlement, if there is a settlement that's not favorable to Ukraine. If there's a Democratic victory, if Vice President Harris wins, then I think you would have a reevaluation of the policy. You'd probably have a continuation of support for Ukraine.
Right.
But I also think there will be less financial support coming from the United States in the next year. So I think either way, we are looking at the possibility of negotiations happening sooner rather than later.
Right.
But the question is, would we have an administration that will give Ukraine more than than it has at the moment?
Dr. Angela Stent, thank you so much. Always appreciate it. Author of Putin's World, and of course over at Brookings Institution. This is Bloomberg.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, TikTok, everybody. About 18 and a half minutes to go until we wrap up the Friday trading session. Does feel like, we're seeing definitely some enthusiasm. We're going to get into some of the sectors and the winners and losers, I should say, a little bit later on. I'm just looking
I like to think of them as decliners, not losers, but thank you for bringing that up.
What is it, like the Academy Award? And the winner is?
Yeah.
Can't even say that
You get
anymore.
the winners, I get the runners-up.
Almost 400 names, 376 names in the S&P 500 higher today, 127 to the downside.
Yeah, we're certainly seeing some strength when it comes to the equity market today. More buyers than sellers. Let's see what our Drive to the Close guest has to say about this. Back with us is David Bahnsen, CIO over at the Bahnsen Group. He joins us here in the Bloomberg Interactive Brokers studio. What do you make of this relentless move higher?
Well, I think a lot of things are getting quite stretched, and that valuation story has kind of confounded things all year long. You have expensive things getting more expensive. You do not have organic earnings growth. They already priced in really robust earnings growth, and it's lived up to it, but it's not going above and beyond that, yet valuations are expanding.
So if you're getting new money right now, how are you putting it to work if things are expensive?
So we're not index investors and we're not big tech investors. And so within a dividend growth, very concentrated portfolio, we never own more than about 30 companies at a time. We think there's good pockets of value in some of consumer staples. We've had a very good year in both financials and even energy. Energy as a sector hasn't done well, but midstream has done quite well and is still really well valued. But we also are going in slowly. We're tethering. If we're getting brand new cash in, we're not putting every dollar of it to work on day one.
How much new cash are you bringing in?
How much new cash are we bringing in terms of just new monies that come in?
Yeah.
Well, we bring in anywhere from $50 to $100 million a month of new money every month.
Is that pretty regular? I'm just curious if it's different from what you've seen over the last 6 months or so.
It's been very consistent for us for a few years now. A bad month is 50, a good month is 120. And right now we're kind of tethering it in. And again, some of the more undervalued things, if we get a company that has disappointing earnings, it gives us a chance to add more. So what you guys are calling the losers of the decline, that's what we like. We like those things when they take a check back.
Where's the new money coming from?
Well, look, there's still a lot of M&A activity. We've had a lot of clients that have sold businesses. You have a lot of people that have had bonds and different things mature. The one thesis I don't agree with is this money market balance and all this cash on the sidelines.
More than $6 trillion.
I don't think that money's coming back into equities.
Where do you think it's going to go?
Bonds. I think most of it was either reserve savings money that was previously zero interest deposit that went to money market to get a little yield, or it came out of the bond market where you could get rid of duration risk and get the same yield.
I wonder why that number keeps getting higher.
I think a lot of it is because people are confusing bank deposit and money market, that you had a lot of money market, which is really short-term T-bills, commercial paper, and it just became a surrogate for bonds because after 2022, which 23 is when bulk of this money moved, and you had the risk at Silicon Valley Bank and some of those things, money markets are paying 5.5% yields. People said, well, bonds are down 10%, 15%. Why do I need to go into bonds? I can go to money market and get a higher yield. So it just kind of reallocated a lot of that positioning.
In terms of Treasury, and you look at the U.S. yield curve, I mean, do you think that we could once again test 5% here potentially on the 10%?
On the 10-year, I do not know. I mean, obviously you could, but it would not be our thesis. I think that, look, there's been very little move up in tip spreads at all. It's been entirely real GDP expectations. So the real growth expectations are not good enough to get the 10-year up to 5%. If it did, I wouldn't see it as a negative because it's not coming from higher inflation expectations. It's coming from higher real growth expectations. And I think that it's gotten quite stretched here. We were at 370. It's gotten up to the 425, 430. I would be very surprised if it goes much above 450, but that's because I'm long-term bearish on structural growth. The 10-year does not measure the Fed. Every day I'm hearing someone say, why if the Fed's cutting is the 10-year going higher? The Fed can't control the long end of the curve.
No, it's the shorter end of the yield
curve.
It's
the short end is all they can control. The 10-year really does price in trillions of dollars of real people's expectations for nominal GDP growth. Inflation isn't moving. Real growth has moved up a bit.
But doesn't the longer end of the yield curve potentially also factor in what the U.S. government does in terms of debt on their balance sheet? And that is something that, once again, for those of us who have been around a long time, we remember all those arguments and concerns about the deficit, and then it went away, and now it's back again.
And this is where I'm a contrarian from the lessons of Japan and the lessons of the U.S. for 15 years after our own financial crisis. I do not believe that growing deficits pushes the yields higher. It puts downward pressure on yields because it suppresses growth. And so Japan went to 250% debt to GDP and ended up with negative yields forever. Central banks manipulate and intervene at that stage, but the point being that real growth expectations go lower, not higher, from increased deficit spending. We're far past the point of a multiplier on this fiscal stimulus.
I want to talk a little bit about a comment from Ed Yardeni a little earlier today on Bloomberg TV. He talked about bond vigilantes mustering as the U.S. and the U.K. prep debt sales. Are you concerned about a potential return of bond vigilantes?
No, I'm kind of amused that we're talking about 30 or 40 basis points. So that's supposed to be bond vigilantes. The 10 years come all the way up to 4.3%, which is still 70, 75 basis points less than it was a year ago. There's no bond vigilantes. Now, Ed, to his defense, who's a brilliant guy and a friend, he's talking about the potential for it to happen. Mm-hmm. But again, the bond vigilante thesis has been out there since post-financial crisis. We've run up these deficits, and it has done nothing but put downward pressure on bond yields.
That said, this election, what happens if one of these parties sweeps and they get this blank check to spend? I don't care who you're talking about. They're both talking about spending a lot of money.
Neither candidate is going to have a blank check to spend what they want. Even, first of all, I think it's very unlikely that Harris ends up with a Democrat House and Senate. It would be a real miracle for her to win and have the Senate move in that direction. But let's say she has a 50-50 control. Mm-hmm. There's one or two Democrats that won't approve a lot of the spending as well. In Trump's case, a lot of the projections for deficit blowouts have to do more with the lost revenue side than increased spending. I still think he'll spend a lot. I don't think he minds spending or big debt and deficits, but the red side of the Senate and House, I think, will have to hold him in. They won't to the degree I need us to. All we're debating is whether or not the deficit goes up $1 trillion or $1.5 trillion. But the biggest thing that's going to bring deficits down a few $100 billion is rates coming lower. The term structure of Treasury debt is so loaded to the short end of the curve that if you go from a 5% T-bill to a 2 or 3% T-bill, you're pulling out hundreds of billions of dollars of debt service cost. That's going to be some of the relief there.
What do you make of a lost decade in stocks? You know that this has been something everybody's been kicking around. David Kostin of Goldman Sachs, chief U.S. equity strategist, published a paper. And basically what he said is suggesting the index, S&P 500, will gain only 3% in nominal terms, 1% in real terms per year over the next decade, which would be one of the worst on record. You buy that?
Completely, but I feel like he plagiarized it from me, but I'm joking. David Kostin is brilliant. His name almost rhymes with David Bahnsen, and I've been saying this for several years. I believe the post-crisis bull market ended in November 2021, and we started at that point a period of what effectively could be a lost decade. I think he said 3% real growth, and I could see it 4 or 5. But
3% nominal, 1% in real.
Right, that will feel like a lost decade to most people, even if you get, let's say, 3% real, 5% nominal. now, even then, you're talking about a tiny fraction of what investors got used to. Investors aren't even right now prepared for historical returns, 9 or 10 in the S&P. They're used to 14 or 15, and they're used to 14 or 15 without down years along the way.
Well, some would say that about rates. This is, historically more normal than what we've
but
seen
you
over
just
the last
cannot
decade or
get
so.
the earnings growth, and you certainly can't get the multiple expansion to make that possible.
All right, David Bahnsen, thank you so much, CIO of the Bahnsen Group, joining us right here in our Bloomberg Interactive Broker Studio.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.